another episode of Business Fumbles. Today's guest is it's a treat for everyone because we have someone here that is seasoned that will talk about life insurance and the different components, that you can use it for financially. So, without further ado, we're going to allow her to introduce herself and tell you a little bit about. She'll tell you a little bit about herself.
Thank you. Thank you for having me.
Oh,
Yeah,
yes,
very
it
happy to
is.
have you on today.
Yes. This is going to be good.
It's going to be a good episode today.
Yeah. So tell them a little bit about you and.
Yeah, of course. So my name is Rachel Santiago. I'm from the west side of Chicago.
Oh, wow.
Oh, wow. Okay.
Born and
Chicago.
raised.
Oh, really? Yeah.
Yeah, I'm from Chicago. Yeah.
Unfortunately, I didn't grow up in a wealthy household. My parents were not millionaires, but they were very hardworking. Typically both had two jobs, and so growing up, we were taught that the way to success is you go to college, you get a degree. It's going to help position you to get a better corporate job, and then you should be financially free. And I'm the youngest of 9 kids. And by
Wow.
the time it got to the age where I needed to start deciding, okay, which college should I go to, I'm realizing, well, my siblings are going to college. They're listening to mom and dad, and none of them is living a life that's any different from people who aren't going to college.
Oh, wow. Yeah.
So I decided to not go to college. I'm actually the only one out of all 9 of us who doesn't have a degree. I came to Vegas when I was 20 and started my first business, which was a wedding chapel.
Okay.
Oh, wow.
So I ran the operations of a wedding chapel for 13 years, found a lot of success in that business, and then realized that I completely hated it. Because you just get to a point in life where you actually start to realize money isn't everything. It's great and it gives you a lot of things, but like internally, if you're not really being fulfilled, it won't bring you that happiness that we're searching for. So during COVID, they get to choose which businesses are essential and which businesses are non-essential.
Yep.
So the whole wedding industry in Vegas is shut down, and now I have an opportunity to really decide what do I want to do,
Yeah.
And so I got approached with an opportunity to get into the insurance industry. And at first I was like, well, that's boring. No one wants to do life insurance. And then really just started researching, learning about life insurance, realizing how the wealthy are using life insurance. And I think the biggest thing for me was understanding how little bit of representation minority women have in the industry is ultimately what made me decide to get into the insurance industry. So I've been in the insurance industry now for 6 years. It's been a phenomenal journey.
Okay.
And literally, so I run a financial education firm where we're teaching people how to use life insurance when you're alive. Because
Okay.
most of us think that life insurance is just a death
After.
benefit.
Yeah.
Yeah, and we're not really educated. Like there's no classes in school. Our parents didn't know it, so what can they teach you? And so we don't realize that the top wealthiest families in the United States are putting up to 54% of their savings into life insurance products because they understand the benefits that you get, when you're alive. And so that's what we do in my firm. We just teach people how do you structure your money a way that the wealthy do, right? I always like to say, well, the definition of insanity is to do the same thing over and over again and expect a different result. So why do we keep doing that with our money?
Yeah.
We watched our grandparents go work hard and they weren't able to be financially free. We watched our parents do it. Now we're doing it and we're setting the example for our kids. And so obviously we got to do something different if we want a different result.
Oh,
Wow.
absolutely.
Wow.
I know that it is a problem, especially in the minority communities where they don't hold insurance important, especially like with their little kids.
Yeah.
They say they're young, they got a lot of years before they die or whatever, so I don't need insurance.
Yeah.
Because they're little and they're not going to die not too soon. What do you say to them?
It's one of the biggest misconceptions
Okay.
because the cost of insurance is based off of your age and your health. So the older you are, the more expensive it is. And if you have experience, like let's say you're a woman who's a breast cancer survivor, now you can't get life insurance. You're declined.
Why?
Automatically?
Why is that?
Automatically.
I wanted to,
Yeah,
I
it-
want to talk about that. Why?
Well, because imagine if you go to the bank and you want like a $2 million loan, they're going to check you. They want to know what's your history when it comes to money. Are you going to pay us back? So it's the same thing. You're pretty much loaning money from the insurance company. And so the way that they check you is your health. what happens is the way that life insurance companies are making profits is they're taking your premiums and they're going and investing it while you're alive so that they can generate interest. And then what they're paying you out when you pass away, it's only a portion in comparison to what they were able to earn in interest.
Right.
But if you pass away quickly, they don't get to earn interest. So
Yeah.
they don't make profit.
Yeah.
It's just not profitable for them to take you on as a client, if that makes sense. And so they want clients that can have longevity. They want to see that you're going to live 20, 30, 40, 50 years so that they can get a return on their investment. And so if you have a history of cancer, a heart attack, stroke, you're just considered riskier. And so they have the right to decline you.
So those type of people, they can't get insurance at all, life insurance at all.
It depends. Typically, you need to be like 4 or 5 years cancer free before you can try to apply. And then it's not a guarantee that you're going to get approved. But if you've just found out you had cancer or you've just been cleared of cancer 6 months ago, you're not going to get life insurance. You're considered too at risk.
So I know that when my sister, she had a policy, and the policy had sort of lapsed, and she had a stroke. And my mom was, like, she doesn't have the insurance or whatever. So when I called the agent, they allowed me to pay to get it back active, but I had to pay a lot more, and I wasn't able to insure her for that much. It was just actually enough to bury her. Is it possible that those people can get something like that?
It all just depends. Again, everything is according to your health. So it would depend, what was the health issue? How long ago was it? In cases like that, they might reinstate your policy. If it hasn't been too long, they're going to charge you some fees for it.
Yeah, they did.
And like
I had to pay
any
a lot.
payments that you didn't pay, you got to catch up on those payments.
Yeah.
So it's kind of a per case scenario. It's not always going to be no. It just depends.
Well, I was just saying because there's a lot of people, especially now, the cancer is on the rise. It is ridiculous on how many people are coming up with cancer, breast cancer, and things like that. And so sometimes they are not insured.
Yeah.
And at that point, maybe they're thinking, I want to get something to at least bury myself.
Yeah.
Will they be able to just get like a small policy?
Yeah,
like
burial.
maybe 10, 15,000.
It all depends. It depends on their specific thing. The life insurance company is literally doing a medical underwriting, kind of like an assessment to see what's going on. So it would really depend.
Okay.
Wow.
Yeah.
Interesting.
Yeah, that's very interesting. Because so many people don't have insurance. And that's why I was so excited to have you on, because we've had other people, but I really wanted to dig into this, why it's so important for families, no matter, how old they are, how important it is to have that insurance.
Yeah. Going back to the question you asked about the kids, a lot of people don't realize this. By law, once you turn 14 days old, a baby can get life insurance.
Okay.
Typically, the only requirement is they have to have, they can only have a half of what the parents have. Yeah. So as an adult, if you have $500,000 of life insurance, you can apply for $250,000 of life insurance on a newborn baby. And why would you do that? Because if you pay for life insurance according to your age and your health, you're never going to be younger than 14 days old.
This is true.
Imagine buying a stock when it's like $1 versus hundreds of dollars. And so you're locking in the cost of the insurance for that child when they're a newborn, and they can have that coverage for the entirety of their life. Yeah. And most of those policies, you'll only pay for it for 15, 20 years, and then that kid has life insurance for the rest of their life.
Yeah.
Not to get into the technical bit, because obviously when you go for life insurance as an adult, they assess you, they look at your health, they look at your history, and there are reasons why they would say no, because it's like, we're not going to get a return on investment. We can't make anything for you. And so if you do it at 14 days, are there any clauses that they could kind of roll back that coverage, because they're like, well, we didn't know that they had this condition or something that could have disqualified them if they went later on in life? Is that like a thing?
Yeah, so this is the thing. When you buy life insurance, you're locked in at what your health is.
Okay.
So let's say you get life insurance and then 6 months later you get a diagnosis. They're not going to come back and say, hey, we're taking this policy from you.
Interesting.
And this
They
is
can?
why they cannot. And this is why it's important that you get life insurance when you're healthy, because when you need it, if you don't got it, you're not going to get it. Like
Yeah.
they're not going to give it to you.
Okay.
And you know what? I want to just dive in right away with the benefits of having life insurance. Now, I have life insurance policies on all my grandkids, on all my kids, but one, I think. I don't have it on my oldest daughter because she handles it herself, and now she's selling life insurance.
Oh, wow.
But I really want to get into this because something that I did not know is that these policies can be a financial tool for you. And I never knew it. So when I started my business, I had someone come in to sell me insurance for the business. And it was a life insurance policy that the business owns, but it has a financial component for myself and for my employees that grows a lot faster than the stock market. And I know that like now, because you talk about the living benefits, can you explain to them how that worked and how it can be a savings, like a 401k for them,
Yeah.
without having all of the penalties and you can't touch it until you're this age or that age.
Yeah.
I want to talk about that.
Yeah. So living benefits and the cash accumulation that you're talking about, they're two separate things. And a lot of times people think they're the same. So the thing with living benefits is, think about all the life insurance companies that are in the United States, right? New York Life, MetLife, Primerica, Allstate, all these AIG, all these different companies. There's only about 25 insurance companies in the United States that offer living benefits. That's it. Living benefits simply means that if you get a diagnosis, it could be a terminal illness, it could be even a chronic illness, a critical illness or injury. So now you have lupus or Crohn's, or you're in a car accident and you have head trauma, or you got cancer or had a heart attack. You got a diagnosis, but you're still alive. They will give you access to up to 90% of the death benefit, and you don't have to pay that money back.
Wow.
So like we had a client a couple years ago in her early 30s, only had her life insurance policy for about 6-7 months, and then got diagnosed with thyroid cancer, stage 3. She has a $500,000 life insurance policy. They gave her a multiple 6-figure check because she got a diagnosis. So they're pretty much upfronting you a part of your death benefit, because who wants to have to work while they're on dialysis or going through chemotherapy?
Exactly.
But it's sad because there's so many people doing that today.
Yeah.
And it's really hard. I'm going to say this, and maybe you can elaborate on it. It's not easy getting these policies because, again, they are checking your health. And when I got the policy on my daughter, they only allowed me to get so much because there was someone that stole her identity. They thought that she was actually in a drug rehabilitation.
Oh, no.
And she never been in that. And they did not explain it to me that that's what the issue was. They gave us the policy, and and maybe you can explain this better. We pay so much, but most of it is more of it is going to the the death benefit or whatever, versus the investing because of the risk with her health.
Gotcha.
You get what I'm saying?
Yeah. Yeah.
And so we did not know. I had paid for it for years. I've been paying for it. And then the policy that I have on her here, that's like it's growing for her to have like her 401k and everything. It's growing in that aspect, but I always have another one in case something happened, because that one will go into a trust or whatever for her children. And then I have another one to bury her.
Yeah.
So I went through I think it's Omaha or
Okay.
something. I don't know the name of the insurance
Yeah.
company. They were the ones that told me, well, we can't do this, but we can do this because she has a history with drugs. And I'm like, what are you talking about?
Oh.
She doesn't have no drugs or whatever. And so that's when it came to light. This person was using her name,
Yeah.
had court cases against her.
That's crazy.
She had to go to court
Wow.
and get that because they were going to arrest her for stealing at stores and everything. So she finally, it just now got through court. The girl just recently died too
Oh,
that
wow.
did it.
No way.
But she actually went into a drug place.
Like
and
a
she
rehab.
told them that she was my
Rehabilitation.
daughter.
That's
Wow.
So
crazy.
now that's on her medical history. And
Can that be expunged or?
we are working on it. It's
Wow.
not easy
Oof.
to get. It's not easy to get it removed. Like I just did a policy for me and my husband. They accepted my husband, but they didn't accept me because my records showed that I had diabetes. I've never had diabetes in my life,
Ooh.
but it's in the medical records.
Yeah.
And these people check your medical records.
Yes.
Yeah.
Because if you don't, when you're trying to get the insurance, these are the things that happen.
Yeah.
Yeah.
And it's hard to fix.
Yeah. No.
It's very hard to fix.
Yes, I love everything you're saying. A couple of things. Yes, check your medical records. Every time you go to the doctor, they're putting notes.
Yep.
The insurance company gets access to that.
Yeah.
And so, yes, I've had clients that are like, well, a doctor diagnosed them with this. And they're like, what? And they're going back to the doctor like, why did you diagnose me with this?
Mm-hmm.
And that's like a whole nother conversation, like pharma.
Yeah.
Like we could get deep into that.
Yeah, but it's a problem.
But it is a problem.
It's a problem.
It is a problem.
Because now we have all of these tools
Yeah.
that we are able to build wealth for our family, and we can't get into it
Yeah.
because of what they put in our records.
Mm-hmm.
Yeah.
Do you feel that that we need to educate more people on being aware of these records and what they can do about them,
Yeah.
especially in like your field?
Yeah, 100%. And I also like, I'm really into like, our bodies were meant to heal ourselves to certain extents. The emergency room, if it's not an emergency, why are you going?
Mm-hmm.
Yeah.
You know, like my daughter will be like, oh my gosh, Mom, I have a headache. I need you to take me to the emergency room. It's not an emergency. You're probably dehydrated. Go take a nap.
Yeah.
Yeah.
Just drink
Probably-
some water.
Drink some water.
Yeah.
You know, so that's the thing too. Like sometimes people go to the hospital like unnecessarily. Every time you go,
Yeah.
they're putting that on your record. And
Yeah.
if you go to the emergency room 2-3 times a year, well, the insurance companies will say something's wrong with you. Can't nobody figure it out. You're too risky for us.
Yep.
Right.
So it's like, number one, like we got to eat better. I feel like they're trying to kill us through the food, but again, that's a
Yeah.
whole nother conversation.
That's a whole
yeah,
other
yeah,
conversation.
you're right. You're right.
We got to drink water. Like you have to just take care of yourself and stop going to the doctor just for anything.
Yeah.
Yeah.
Well, I go to the doctor. I take my annual physical, and I'm telling you, I've never had anything concerning diabetes.
Yeah.
Never took no pills.
Yeah.
Never had no shots. Never even been told that I was borderline diabetic.
Yeah.
But you have that in my record.
Yeah.
Why?
Yeah.
Yeah. And I'm a really big believer when it comes to life insurance, you should get with a broker. Like
Okay.
I would never go directly to one insurance company. Cause like imagine, let's talk about shoes, right? Imagine if you really needed some tennis shoes, but you go to like a woman's high heel store. They're going to try to convince you that you don't need tennis shoes. You really need these high heels.
Yeah.
So when you go directly with an insurance company, they're in sales. They want you to buy one of their products. So they're now convincing you that their product is best for you. Versus when you go with a broker and this broker gets access to all these different insurance companies, they can say, hey,
That's what I went through. A
yeah,
broker.
it is really the
And
best.
she's the one who told me, she told me, listen, I'm trying to get this one because it's best for her because she's young, but because she's been in rehab. And I said, rehab for what? And she's like, for drugs. And I was like, she doesn't do drugs. What? What are you talking about? And then when she sent the records, she's like, what are you talking? I've never been in a rehab. What are you talking about? And that's how we literally found out
Yeah.
that someone was using her name.
That was
That's
through the
crazy.
broker, or was that through
the broker.
Oh, so
Yeah.
they have access to that information
They
too.
have
Oh.
because they're trying to get the best policy for you.
Yeah.
Mm-hmm.
So basically, what they're going to do is they're going to say, I don't know if you do this, but when you sit down with someone, you ask about their finances
Yeah.
to see
Yeah.
exactly where you can sort of put them.
Yeah.
And then once they find that, listen, you have the money, let's do this.
Yeah.
Because this is how it can grow. Because, like sometimes wealthy people, you could put money into that policy. And then when you need money, you can pull it out and there's no tax consequence.
Yeah.
And I don't think people get that.
So let's get into that because you
Yeah,
asked that
for
and we
sure.
kind of started going
We
away.
kind of went away, yeah.
So there's only 3 types of life insurance policies. You have term life insurance, which majority of people are familiar with term. And the reason why is especially within the Black and brown community, it is the cheapest type of life insurance you can get. So on a sales side, it's the easiest thing you can sell because it's so cheap. And so for years and years and years, it's all that was being sold to the Black and brown community. I can walk into a household, I can tell you, hey, for $30, you can get this much insurance, and it was a quick, easy sale. They didn't spend the time actually educating us that there was other options out there. Then you have permanent life insurance, which is what you're talking about. Permanent life insurance, it doesn't expire. Your death benefit's going to stay with you to your 100th or even 120th birthday. Who's living to be 120?
Nobody.
Not in this country.
Nobody. And so it might as well be a guarantee. This death benefit is going to pay out. Whether it's $1 million, 500,000, whatever the amount is, now that goes to your children or your grandchildren. Now you're creating generational wealth. They don't have to pay taxes on that money.
Exactly.
And then it has that cash component. So the way that it works is every time you make a payment into your policy, obviously you have to pay for the cost of the insurance. So they're going to take a portion of that, make sure they're paying for the insurance, but the rest of it goes into a separate account. That account is tied to the stock market. So for example, the S&P 500, every single time that the S&P 500 is up, your money is growing.
Yeah.
When your money's down, it's not an investment. You're not directly investing into the stock market.
Yeah.
So what will happen is the insurance company will give you a 0% interest rate. It's basic math. If I got $10,000 in an account and you give me 0% interest, I have $10,000 in the account. So anybody who has a direct investment into the stock market, they're suffering a loss, but I'm not because I'm doing it through a life insurance company. And then it's life insurance, so it grows tax-free. You can borrow that money when you're alive. You're not going to pay anything in taxes. You technically don't even have to pay it back because what they do is they use your death benefit as collateral.
Yep.
So let's say you have $1 million policy and you've accumulated 100,000 and you've been borrowing this money while you're alive and then you passed away. They're not going to write $1 million check. They're going to say, wait, they borrowed money. They're going to subtract that, and then whatever is left over is what they pay out. And this is why the wealthy put so much money into life insurance.
Yep.
Because when you think about money, you only have 3 options. You could put your money into a fixed account. That's the bank. Why do we like the bank? It's safe. But the bank gives you low to no growth. So if you're
Nothing.
really wanting to build wealth, it's not going to grow. What's my second option? Variable accounts. That's like the 401k through your job, an IRA, a mutual fund, stocks, and real estate.
They stuck.
They're good because they grow, but they're not safe.
They're not.
And so when you need the money, you better hope that the market's up and not down, right? And then you're also getting taxed. You got income tax. You got
Penalties.
you got penalties if you take it out too soon. You got your capital gains taxes.
Yep.
There's taxes.
Yep.
And so the third way that money grows is through an index. It's known as a LIRP. It's a life insurance plan where they give you the growth when the market's up. You suffer no losses when the market's down. It grows tax-free. And so the wealthy literally are just using life insurance as a foundational tool
Yeah.
to help them go build wealth.
Yeah.
You know, Warren Buffett, right? Billionaire,
This is
stupid
multi-billionaire.
money.
Yeah.
He says there's 2 rules to this money game. It's that simple. The first rule, don't lose money.
Yeah.
The second rule, don't forget rule number 1. That's it. And so like in middle class America, we're under this idea of like, I just got to invest. The wealthy don't invest their own money. They leverage somebody else's money
Yeah.
because they understand investments are risky.
Risky.
Yes.
Yep.
So I like to tell my clients, what's the percentage of your money that you're okay with losing? That's the percentage that you should be investing right now.
Yes.
But if you're not in a financial place where you could really afford to lose money, then go start to build it through life insurance products because it's inevitable. We're all going to pass away. There's a 79% chance you will get either cancer, stroke, or a heart attack if you're in your 60s.
Yeah. It's very high.
And so get the living benefits and then you grow money through the policy.
Yep.
And so it's literally the tool that they're using to build wealth. But when you come into our communities, like you said, why do I want life insurance on my daughter for? You know, it's like
it's not talked about.
It's not talked about. Every time I hear somebody say, if I pass away, I'm like, I want to karate chop you right now. What are you talking about? If.
Right.
Like,
yeah, because you're going to pass
you're going
away.
to pass away.
Yeah, you're
it's
going
gonna
to pass
happen.
away.
Two things: death and taxes. We talk about this all the time.
I'm, you know, like when I learned about it, it was great for me because I'll be completely honest. I am an extremely overthinker. I'm an overthinker. You tell me one thing, and you can say, "Hey, Sheila, if you do this, this is what's going to, you know, you'll be able to do this in 5 years, and you'll be able to do this in 10 years." While you're telling me that, I'm over here in the back of my mind, yeah, but this can happen, and then that won't happen. And then if I do this, this can happen. That's how I am. So with the life insurance, it sort of, you know, gave me that space where I could breathe.
This peace of mind.
Yeah. It's like, okay, this sounds better because now I don't have to overthink. It is what it is.
Yeah.
You know, and I'm going to benefit no matter what. You know, it might not be the biggest benefit over here, but it's a better benefit than if I'm over here. Because I've seen so many people that uses the 401k and different things. And then when the market crashed, their money, they lost so much money. Look at the elderly when, look at how much they lost during
It's
COVID.
so sad.
It's really sad. A lot of them ended up having to go back to work because they lost so much. And I feel that that's totally unfair because they didn't ask you to gamble their money. They asked you to put it somewhere that was going to protect them when they were older. And these 401k plans,
they're trash.
they're right.
Yeah, they're
and
not great.
they lost money.
Yeah.
They lost money, you know, for these people, and these people needed that.
The 2022 market crash, retirement savers lost $3 trillion.
That's crazy. I didn't know it was that bad.
$3 trillion.
And it was, I had one that I think she, in her 401k, she had like maybe, was that when the housing market crashed too?
That 2008.
That was-
Okay.
that was
the market
08,
crash.
yeah.
So they had something like maybe 6,000 or 7,000 in that plan that they had, and it went down to like 200.
Yeah.
That's crazy.
From that, they lost that much.
Oh yeah.
And they didn't know what they were going to do.
Yeah.
And then when the market, here's the sad part, when the market rebound, they didn't get half of what they lost.
Yeah.
Yeah.
So what good was that rebound? I personally, I have a problem with a lot of the 401k plans because I don't think that they are good. I personally don't think, unless you are very conservative.
Yeah.
Well,
I'm a conservative person, and I
Yeah.
go with a lot of bonds and stuff. So that means that mine is not going to grow as fast as the next person.
For sure.
But younger people, they're willing to risk it all.
Yeah.
But that's kind of the big thing right now. Everyone's like Roth IRAs and 401ks is my generation, like the late 20s, early 30s. Like they're all investing in that really hard.
Yeah.
Would you feel that they need to be a little bit more apprised of like that versus life insurance? And at that age, like what's a good age for someone to start thinking about this for themselves in their life, actually?
As soon as you start working.
Really?
Like my daughter's 18. She got her first job. She already has, I have 2 life insurance policies on all of my kids, but she turned 18 and I'm like, okay, you see me. Like she observes mom in business and she hears how I teach my clients. So I'm like, it's your turn.
Yep.
So I literally got my daughter $1 million term policy for $19 a month. That's all she pays. And so it's not growing money yet, but these term policies, they allow you to later on convert it into a policy that grows cash.
Okay.
So she just got her first job. I'm like, I want you to start getting just having the habit of being disciplined with your savings. So we have a whole plan for a year. She's just going to start saving. And once her savings account gets to a certain place, now she's going to start putting money into life insurance. Like you should do it when you're young.
Very
You really
young.
should.
Yeah.
One thing
Because
that
if they do it like at 18 and not use the term, but use some of the other tools.
Mm-hmm.
Explain to them by the time they're 35 what they would have.
Goodness, it's so a couple of things to that. And this is just compounding interest in general. The earlier you start, the longer you let it compound, the more it's going to grow.
Math, yeah.
So you start this policy when you're young, 18, 20 years old. Yeah, by the time you're 35, 40, depending on how much money you put into it, you could have six figures, tax free.
Yep.
Yeah.
And when you compare that to a Roth, the first thing that you have to understand is that if you were to get sick, Vegas is crazy how they drive out here. You get into a car accident, and all you have is a Roth IRA or a 401k, you get into a car accident, you're going to get penalized or have to pay taxes if you need to take that money out to pay for your bills because you're in, you're in therapy, you're recovering.
You can't work.
You can't work.
Yeah.
But if you had that money in a life insurance policy and you get into an accident, it's not even touching your cash. They're pulling from your living benefits.
Yeah.
So your cash is going to keep doing what it's doing. Another thing, too, with these permanent life insurance policies, you don't have to pay for them the whole time.
Yeah.
And so let's say I paid for it for 15, 20 years, and the cash is already at that point equal to what I put in.
Mm-hmm.
Yeah.
It means the insurance, it technically becomes free.
Yeah.
And when I say this to clients, they're always like, wait, what? So think about this. Let's say that over 20 years, you put like $30,000 into it, and it has $35,000 of cash. Well, if I give you $30,000 and you give me $35,000 back, I didn't give you anything. You just gave me $5,000.
Yeah.
So you just gave me back all of my premiums, which means when I pass away, my family gets all this life insurance for free.
Yeah. Yeah.
But we're out here like, I don't need life insurance.
Yeah.
And
it's because they don't see the
know.
long-term goal. Yeah.
And
They
I
don't
was one of
know.
those people. That's why, like, it's very important to, advocate and tell people how important it is, especially like, let's say you are young, you are 20 years old, you got 2 kids, single parent. A lot of times they live from check to check. But these policies, if you get into it, at the right time, it's like you're paying the same amount that you go and pay for a bottle to have a party or buy you a bag of weed. Hey, it's out there. So don't hate me for saying it. But, or you going out and having a dinner just for you and your kids. That's how much it's going to cost you. And you're protecting, yourself. You don't ever have to feel that when you're 25 and you're still in that same situation, you're not crying and saying, I got nothing, I got no money in the bank. Because when you look at it, you have money stored there and you didn't even, think about it because it's so small of what you're giving up.
Yeah.
That's the message that I want people to get from it. It doesn't matter that you don't have a lot. There's still something that she can put you in that's going to benefit you years down and your children.
Yeah, of course. People think that life insurance is super expensive. It doesn't have to be, because you can have multiple policies and your policies should change as your life changes. Mm-hmm. If you're in a tough financial situation, then do start off with a small term policy, because again, those term policies, they'll let you convert it into a cash growing policy later. Yeah. So start there, and maybe a couple years later, you got a promotion, you're making more money, you're in a better position. Now you can change it, but it doesn't have to be hundreds of thousands of dollars a month for you to just start.
Yeah. How often do you think someone should reevaluate their situation? Like, typically in life, is it like once every 5 years things change, you probably should start looking at this, or even sooner? What do you think?
Sooner. So I like to meet with my clients at least once a year.
Okay.
At least once a year. They might have got a promotion. They might have increased debt. They might have had a baby. They might have done other stuff. And so we want to just make sure that the policy is what it needs to be.
Mm-hmm.
Yeah. Okay. So do you find that doing it yearly, things happen that you didn't even expect? You're like, oh, we can actually make a change. Good thing we meet every year instead of like postponing this 2-3 years at a time. Like, do you feel that that's a minimum rule that people should be following?
Yeah. A big thing that happens is the beneficiary passes away.
Okay.
And they're so like going through that mourning, and that they're not thinking, oh wait, this person was my beneficiary.
Yeah.
Right. So making sure like your beneficiary is up to date.
Yeah.
You know, if you had a baby, you know, we want to get a policy on the baby or add the baby, even if you get divorced. There's been situations where people get divorced
And leave it.
they leave the beneficiary, and then something happens, and now you're going to court, you're trying to fight for this money just so that you can have money for your kids. Like
Yeah.
a lot of situations like that we don't think about.
Yeah.
Or like you got a promotion, like, hey, I'm making, you know, a couple $1,000s more a year. I need to put this money someplace so that it can grow. So yeah, I think stuff happens pretty often that we're not thinking about. Oh, let me check my life insurance. So
You know, since you touched on that, how important is it when you're choosing your beneficiary?
it's important to an extent. Most situations you can change your beneficiary so it's not stuck. One kind of rule of thumb is never put kids as a beneficiary.
Why?
If they're not 18, because a lot of life insurance companies are not going to write a check for $500,000 to a child. They're going to wait until a guardian has been established, and then they're going to pay the check to the guardian. And so, especially like a single mom, they're not going to, you got a 10-year-old kid that you put, they're not going to write $1 million check to a 10-year-old. You have to wait, and there might be a court process.
Yeah.
What if that mom didn't have any immediate family, and now they're trying to, you know, place the child and figure all this stuff out? They're not writing checks until guardianship. And what if the child really needs the money? So you always want to have somebody, or get a trust. And trusts
Yeah,
are
that's
not
what I was
That's what I was
trusts are
going to
not
ask.
that
Yeah.
expensive.
No.
You know, get a trust, put the money into the trust, and let it, you know, give them
Yeah.
access to it when you want them to get access to it.
Because that's a good point, because I do have my daughter's biggest policy. Her children are her beneficiary, but I do have another policy to bury her. And I just automatically thought that they wouldn't be able to get it until they were adult. That's why I did it that way. But now that you're bringing that out, I need to rethink it.
Yeah. Have you run into that? Have you run into ones like going like, I want this to go to my kid, but I know like if something happened in the near future, they're not going to get it right away. Is there like legal, I guess, precedents for ones sending it to another adult, but that adult must legally make sure it goes to the kid? Is that like a
Yeah.
thing? Or-
That's a really good question. I actually deal with this a lot. I was a single mom for 7 years. Like if you look at my content, a lot of my content is for single moms. And so a lot of times what will happen is they'll want to put it to like their best friend or a sister or a family member, because they don't want to put it in the kid's name. They don't want the dad to get it, or the dad's not in their lives. So by law, that person is not required to do anything if you don't have it documented,
yeah.
which is why you need to have a trust.
Okay.
Because in the trust, you can say, okay, the money is going to go to my sister, and I only want this much used, you know, while they're still in school. They don't really need a lot. You know, when they turn
Right.
18 and they're graduating high school, if they graduated with this grades, then buy them a car, or, you know, use this money for college. Like, you're leaving it up to that person. That person could do whatever they want. If you don't have
That's
it
what I was
documented.
worried about,
Yeah.
because
Yeah.
money, you get a fat check and you're like, okay, could you please give
Yeah.
this to my kids? Like,
Yeah. Yeah. They're
I
gonna
don't
be
see,
like,
I don't see a law telling me that I have
Yeah,
to.
see,
See, I'm glad that she brought this up, because now I have to rethink things. Because I even for my son's policy, I pay for all of their policy because I want to make sure that they have it. But like the beneficiary, you know, I sort of like made it as their children. And when they're, you know, like, because I figure with the policy, they're not going to give it to them until they're 21, you know. But that's not necessarily
Yeah.
true. So I need to rethink that.
Mm.
See, I told you this was going to something good's going to
She's like, I learned from this episode, actually.
Right, because you know, I that's something that you don't think about.
Yeah.
You know, but I just feel like with the insurance, I want to go into this because a lot of people are going into being insurance agency. I've had so many people approach me and ask me to partner with them because I'm in the financial industry, and they figure, you know, a lot of the people I can sell the insurance to, you know, because I'm already in that area where I'm helping them with their finances and budgeting and everything. But I have heard this a couple of times, so I want to, you know, ask you about it. What are, you know, what do you say to people that say, well, I'm tired of these different agencies approaching me, and it's like the pyramid type thing. Or if I have this and then I get five more people or whatever, and they don't get the sense of it. How do you explain that to the people that have that type of
Yeah.
attitude about it?
I think in all transparency, if you have an issue, okay. So when it comes to like recruiting, yes, there's scams out there. It's just the truth. But when it comes to recruiting within the insurance industry, we're no different than real estate. And what I mean by that is in real estate, you could be the agent, you're going to sell houses, you're going to work underneath a broker, or you could be a broker, you can sell houses too, but your primary time is really investing into training your agents and making sure that they could, effective and efficiently go sell houses. And so in insurance, it's the same thing. You could be an insurance producer who is someone who just says, I'm just going to go help clients. I'm going to just write policies. That's how I make income. Or you can be an insurance broker where you're recruiting, you're training, you're developing agents, and these agents are going out. And then the broker is generating passive income.
Right.
But that's any business owner. And the problem is most middle-class Americans don't understand what true business ownership is. You'll get a lot of people who are self-employed who think you're a business owner. Well, if you cannot step away from your business and continue to generate income, you don't have a business. You're self-employed.
Yeah.
And so people, it's a pyramid because I make income that's not tied to my time. No, the only way that you become financially free is having income that's not tied to your time. If you continue to work, and you can't figure out how to make income when you're sleeping, what do they say? You'll work till you die.
Yeah.
Yes.
Yeah.
And so if you want to be a true business owner, you have a passive income business, you got to figure out how to not trade time for money. And so you develop people who can, in essence, learn how to also sell policies. And you're just buying back your time. If you're one person, you got 24 hours in a day. But if you got 10 people out helping families, now you got 240 hours in a day.
Yeah, exactly.
Yeah. Oh, that's good, because I've heard that, several times, and it's good that you like explain that. Like, it's a business. And in a business, like, I've been in business for 11 years, and sometimes I sit and think I do have a lot of components to my business where all I have to do is sell it, and then I get that commission, and then when the checks come, I'll be like, oh yeah,
Hey, y'all doing good.
like, hey, you look at it that way. But I think that with the insurance, I'm getting a lot more excited about it because of the tools that's associated with it to help, people build that wealth.
Yeah.
Because one thing that I hate, and I see it so often, when people die and they start that GoFundMe.
Oh my gosh.
Yeah. That's the new thing right now. That's what's been most common.
Yep. I just made some content about somehow, some way, GoFundMe has become America's greatest financial plan. Like, we're all just depending on it.
Yeah.
And GoFundMe was not even started with the intention to be for funerals at all. It was supposed to be crowdfunding for like
Yeah, it was
businesses.
like Kickstarter, right? Basically.
I have one child that I won't do a GoFundMe, but I can't get any insurance on,
Yeah.
which is sad. But
Yeah.
I haven't been able to get a policy on him because of his situation.
Yeah.
So he's the only one that if something happens, we would have to try to figure it out and do it on our own, because he had the car accident and now he's disabled and they won't insure him.
Yeah. I had a uncle pass away 2 years ago now, and there was complications with everything, how that all happened, and my aunt and my uncle were well off, living in a nice little suburb out by Miami, nice big home and everything. They were fine, but my aunt still had to do a little GoFundMe for the funeral, at least to cover some extra costs, because she was just like, this is just so much, it's so complicated. We're still, even people who seemingly are doing well with their money still go and rely on GoFundMe because they're not prepping for everything. They're not thinking about everything.
Yeah.
They're not having everything covered. And I feel I feel like it's good that we're doing this episode because I think a lot of people, like you said, especially in our communities, they are very uneducated.
Yeah.
Yeah.
There's
It's expensive.
yeah,
You're talking
It's-
about
it's
like a
money.
basic funeral, not a fancy one. It's like 25,000.
25,000.
Who
Yeah.
wants to wake up one day and find out I just lost my loved one and now I need to swipe my card for $25,000?
Yeah.
Yeah.
Even like you guys saw the actor from Dawson's Creek. I forget
Which
what
one?
his name is. But like the main character from Dawson's Creek, he just passed away in February.
Mm-hmm.
So this guy is known
No
as like our
way.
yes.
What?
He's-
I'm looking this up.
He's known as like, one of our childhood superstars. I can only imagine how much money he made in his career. His friends and family had to put up a GoFundMe for him. And they raised millions of dollars. And you know what was sad to me? I'm thinking, I could imagine like some of his fans who are paycheck to paycheck today, they donated to the GoFundMe just because of like the part that they played growing up. Oh, I love that show, But it's like you just donated. You can't afford to donate. And so GoFundMe, it creates generational poverty
Yeah.
because you find out, oh man, my cousin was in a car accident. He passed away. I'm paycheck to paycheck. I got to buy diapers and formula this week, but I'm going to give my last, $50, $100. And now you're out here like, how am I going to buy these diapers and formulas? What? You didn't add value to the community. You're taking from the community by asking them to give you something that they can't afford to give you.
Yep. But unfortunately, there's cases where they have no other choice because I have tried to get him insurance. I don't know. And the only thing that I was able to get is accidental. I think it was
Mhm.
accidental. But what's the likelihood of him dying from an accident?
No one thinks
What
about
if he
that.
just dies in his sleep?
Yeah.
Mhm.
You know?
The
If he
accidental,
gets
the accidental, it's not terrible. I will tell you.
Really?
For a long time, I was like, I don't get it. But car accidents is actually the number 3 leading cause of death in the United States.
Oh, I believe it.
So it's not terrible, and it's very inexpensive.
But he won't drive.
But one thing that I will tell you, possibly depending on your guys' situation, so you have some life insurance policies that are growing cash. Whatever is the budget that you would have had to put in a policy for him, put that extra amount into one of the policies that grow cash. And then when he does pass away, depending on when that is, hopefully that cash has had some time to accumulate and grow, and just pull the cash out of that policy and pay for the funeral that way versus, hey, we're getting into debt, we're swiping cards to try to pay for this funeral, if that makes sense.
Yeah.
So what do you say to people that's in that situation? Now they have no insurance and they've tried to get insurance and they can't.
Yeah, it's tough. It is. It's a really tough situation. I would say make sure you try with multiple carriers
Mhm.
because the carriers, like their
I don't think I
guidelines.
tried. Well, actually, you know what? I take that back. I assumed because I didn't go through a broker. I didn't.
You went directly?
I went directly. I just went to, once he became my responsibility, I just went and said, hey, I need to get insurance. Because before, I wasn't really worried about it.
Yeah.
I think that the older I get, the more I realize that, hey, I need to get insurance. I need to do this. I
Mhm.
need to, because my children are all grown and have their own family. So, like with my son, he has his wife and his kids. And I'm always saying, do you have insurance? And he's like, yeah, Mom, I got insurance. Can I see? And he's like, what? Are you serious? And I'm like,
Yeah.
yeah, I'm serious. So right now, those are the only two. I have 5 children, but only 2 of them, I don't know their situations, and I'm not able to get, because I know with my oldest daughter, I told her, I want you to get a policy and I'll pay for it. But it never happened,
Yeah.
And I tell them, because I pay for my other kids, but they chose their beneficiary. I don't care. I just want to make sure that, number one, if something happens to you, I'm not the one that's footing the bill.
Yeah.
And number 2, I ain't footing the bill for your kids.
Making sure they're taken care of.
Yeah.
Yeah.
Yeah,
Yeah.
because she can have a policy and I can pay that extra
Yeah.
Mm-hmm.
to make sure that her kids are okay and
Yeah.
they ain't running to me.
You know, I love that you're doing that. So I listened to a podcast interview of this guy that's a multi millionaire, and his kids are all adults. And they're all business owners now. I think one of them is an attorney, and the other ones, they all own businesses. So now he has grandkids. And he says once a year, they take a family trip, which is a tax write off. That's a whole nother conversation because they all
Oh,
have a
boy.
business together.
Right.
But once a year, they take a family trip, and it's a chance for like all the grandkids to play together. But it's really the family financial meeting, is what he called it. And he's like, this is where they come together and they talk about like, how are their investments doing? Are there any, business opportunities or any investments that they should do together as a family? And they talk about
Oh,
like,
that's good.
they have all these conversations about how like, where's our family net worth? Where is it projected to be 5 years from now, 10 years from now? And I was sitting there thinking, that's crazy.
Yeah.
Like the entire family has to come, and they'll go out to like Aspen and rent this huge house for the weekend. And it's the whole purpose is to make sure that everybody in the family's finances are together. And he was sharing that one of his sons was like going through a really hard time. He was like in between jobs, and everybody has to pay to go. So he's like, I'm going to pay your flight and I'll pay your portion of the house that we're staying in, but you got to work this off. And so I just loved how like as a family, they were like, nothing matters more than our family legacy. So we need to grow as a family. And he was saying that son was at one point like cutting grass and doing whatever just to make income. And they've helped him like grow. And so I'm like, man, when it comes to our communities, like we won't even have basic conversations about money.
No, don't talk about money.
Don't ask me how much I make. Don't talk to me about what you heard about credit repair. Like, don't talk to me about life insurance. I would tell my family, I'm in the industry. If you're not willing to sit down and get a policy, don't have your spouse send me no GoFundMe. Like,
Yeah.
what?
Yeah.
Right.
It's craziness, but we don't talk about it. Imagine you learn things that can help benefit you financially. You're not willing to share it with your own family?
Yeah.
Well, I think I really like that idea, and I'm going to really consider it because I'm already an advocate for my grandkids. My grandkids right now, even the little one, and he's 6 years old, and we was on vacation. He said, "Grandma, can we go to Walmart because he wanted to get some type of tablet or something like that?" And I said, "Okay, you have a choice. We can go to Walmart. I can get you that tablet, or you can tell me which stock you want, and I'll buy you one stock." And he said, "Really?" I said, "Yeah." And he said, "I'll take the stock. I want an apple."
Apple.
And he's 6 years old.
I love
So
it.
I'm on them. They all have Acorn account. I give them $10 a week. It's their allowance. And they literally got a stock
Portfolio.
portfolio thing. And their mom was doing their her taxes, and they got a tax form.
Mm-hmm.
And she says, "I'm not putting this on my thing. I'm not putting this on there because they have dividends." And that's all that I give them. They get $10 each week to go into their stock account. And then I started it on Acorn. Anybody can do this.
Yeah.
Yeah.
That money grows so fast. You will not imagine. Like together, my daughter said, "Shoot, with their accounts, they could pay my rent like 3 months." And I don't have no problem. Not that she would do that, but that's how fast the money grows. And it's no excuse for us to be in the situation that we are with our children. And I give them my oldest grandchild. He gets, I think, $8 a week for allowance. And then the other ones get $6. And I also use, it's called an early account or whatever. And they transfer that $8 or whatever into their account, and they have a debit card. And so they're not using the money because their mom don't allow them to use it. But when we go on vacation, like last year when we went on vacation, they took their, we went to Florida and they had their debit card. And he said, we're in the store and they wanted to buy stuff in the store on Disney. And so he said, Grandma, can I get this? And I said, how much is it? And he told me, I think it was like 80 something dollars. I said, okay, let's look in your bank account and see how much you have. And so when he looked, I said, so now if you buy this, because I think the total came to like 200 and something because he had a basketball cap or whatever. I said, you're going to clean your account out. So what you can do is you can get some of it and leave a little bit in there so that you can build it, or you can spend it all. It's totally up to you. And he looked at me and he said, I'll put some of it back and leave some in there. And I told my daughter, I said, that's teaching him that he doesn't want to spend it all.
Yeah.
And like, they don't have a lot of money, but like now we are about to go on our vacation and they have their debit card. So when they ask me for something, no, you can pay for it. Well, how much do I have in there? Go to your phone. It's there. And they see and they know not to spend it all.
Yeah.
So it's sort of like helping them and teaching them financially. But I'm already on it with the little kids, but I'm not with the older. I don't have that discussion. So that idea, I think that that's a good idea for us to start communicating and saying, hey, where are you? What are your thoughts?
Yeah.
What are we doing? Because I think that if we had discussions like that, things would be better for, all families. If, just imagine.
Easily.
Yep.
You sit down with your family, like Tim, you have a large family, and you all sitting there saying, okay, well, I'm here. Where are you guys at?
Yeah.
What's going on with you? Mom, Dad, where are you at?
Oh, yeah.
What are we doing? Imagine how much more you can build.
Oh, yeah. And that's the thing. It's like, nothing against my father. I know he's probably going to listen to this one day, so I don't want to talk bad about him. But I know it's a little hard talking about money with him because he's the dad. He's the patriarch. He runs the money and everything. So he expects me to run my money. But I'm very close to my two brothers. And one's in college. I'm trying to actually get to work with me in my full-time job. And I've been working there for 9 years. So it's like we talk like, what do you need? What can I help with you? You're in school. Yeah. Can we use your school benefits to run some money through your accounts, get some discounts? It's like we do that. My dad sees that. He's like, I want in on this pie. Wait, hang on a second. Why are you guys all building yourselves up and all doing well? My brother lives in Japan, by the way, which that we did together as a team. We were able to do that. My dad wasn't in it. So now he's just like, he sees like, oh, it does work better when we're all a team, when we all help each other out. And so now, actually, coincidentally, I bring this up because my brother's here for spring break. I'm dating this episode, by the way. And so we're all talking about that. We're like, where are we going to be in the summer? What's everything looking like? Like, are we going to have to downsize, save our money here, and then use the money there later? We'll have something better. We should have been doing this years ago. And I don't think families make it normal. And
it should
we
be.
know nothing about life insurance, by the way.
Yeah.
Right.
It's like, that should have been a discussion years ago too. And now I'm looking like, now I'm getting older. I'm 30 now. I was like, I need to start looking at like what's the next 30 years going to look like.
Yeah.
So it's still late, but you could still start something.
Yeah.
It's
I'm
never
gonna
too
set
late.
up an appointment with her.
So this is the real reason why you're on today's episode, actually.
Right. No, it's not. No, it's not.
No, we're
I'll
kidding.
say
We're
that.
kidding.
No,
We're kidding.
it's just that there's a lot of things that brought out that maybe I need to regroup and reconsider some things.
Yeah.
Because even though I do have it, maybe I don't have it all set up the way it needs to be set up. So,
Yeah.
I need to. But you know what? We have went over.
We are at
30
time.
minutes.
I was looking at it. I was like, oh,
Yeah.
we're good.
It's almost 11 o'clock. So, no, we're not. Okay?
We're all good.
But anyway, I think that this episode is very important. And I will be doing another episode to bring more than just her in this area because I think it's important. Like, people, stop sleeping on the life insurance. I have to say this because I've always invested and I've always tried to save and put things to the side, and I've never felt more able to relax, relate, and release with these tools that's been presented to me. And Also, she's going to tell you how to get in touch with her. But for all you business owners, because um, it has in Nevada, and I think it's going to be everywhere. If you have over a certain amount of employees,
Yep.
you have to now give them 401k. And I know for a fact that the insurance industry have policies that
Yep.
will cover that.
Yeah.
And you don't have to pay as much as
Yeah.
you have to pay when you get these 401k plans. So, for all y'all business owners out there that needs to get that 401k because you have over a certain amount of employees, listen up as she gives you her information to get in contact with her because it's a cheaper way to go. Point blank. It's a cheaper way to go, and it's a better way to go.
Yeah.
Because I have a policy for my employees, and they get more money, like when one of my employees need money and she goes to the policy to get money, she got way more than she would have trying to grow it in 401k. And I'm telling you the truth.
Yeah.
So the conversation won't end here.
Yeah.
I am a strong believer in educating. I don't care who you are. I'm a strong believer in educating. I'm a strong believer that if there's something out there that can help the community, then put it out there, scream it, write it down, let them know that it's there. Because as I always say, what good is education if you don't share it?
Yeah.
Yeah.
If it's not shared, then what good is it? Just because you know it, that's not the way we should be. So I'm going to allow her to tell you guys how to reach her. What's your pages? What's your handle? How do they get in contact with you to learn more about your services?
Yeah, all social media platforms, Rachel the Wealth Warrior, TikTok, Instagram, Facebook, LinkedIn, all the platforms. Again, Rachel the Wealth Warrior. Or you can go to widfinancial.com/wealth warrior, and you'll get direct access to being able to book an appointment with me there.
All right. Perfect.
Yes. Yeah. I thank you so much for coming. I hate that we don't have enough time, so I'm going to be forward to let you know we're going to have to bring you back.
I'd love to.
There's so much more that, we can discuss. I want to be able to talk about all of the different, policies and tools that the insurance industry have. You touched on the living benefits, but I know that there's more.
Yeah.
And the living is good and it's important because, you get diagnosed with cancer and then you call them and say, I need 200,000 or 300,000. Like, who doesn't want that?
Yeah.
Who doesn't? So I thank you for coming on, and for all of our listeners, we thank you for listening. If you are a business owner or you have your own thing going on, we want you to sit on this chair. So please reach out to us. You can even just leave a message on the episode, saying, hey, I would like to come on. We will get you on there. Make sure that you subscribe to the YouTube channel, which is Business Fumbles. Make sure that you subscribe to that because all of the, new episodes will be uploaded, and other things that we're working on will also be on that channel. So make sure that you subscribe. And we are also on Instagram, which is She Wins 1919, and our Facebook page. Just look us up, subscribe. And if you are a business owner, no matter what stage you are in, we want you to sit up on your couch because your story can possibly save the next person. So we will see you again next week, and thank you guys